the delights that is Clever. And
Yeah,
so,
yeah,
so there you
absolutely.
go.
It just keeps doing it. It does its thing. Like that's kind of the thing. Like we've got this whole organization. We got this communities that we build around these products and these ideas and stuff. But like when it comes right down to it, we're deploying something on an immutable, like we're deploying immutable code that just does its job. And as long
Yeah.
as it continues to do its job, it's like it's boring to say updates about, but it's awesome that it just keeps magically working for you. So loving it.
That's the goal, right? Yeah, exactly. So there you go. Clever's doing its thing. Um,
Think I feel in my bones that it might be time for another booster round for Clev.
oh yes, yes, it is coming up. Yeah, and you know what? We will keep you guys notified of that, but just keep making content, regarding Clever, because it looks like Clever's getting a little bit of attention there. If I
It
look at
does.
CoinGecko, so
Yeah. It seems like suddenly somebody just kind of realized that Clef tokens control a huge amount of non-gauge governance power, and now they're catching up. Hard to say. Listen, you know what? When you try to when you try to assign a specific narrative or reason to a market movement, you already know that you are in the weeds.
who knows, right? Yeah,
It's not.
exactly.
Yeah, no, exactly. There's no point. But listen, when with a little bit of good price action, it gets on more people's radar. So now's the time. This is kind of like striking when the iron is hot. Now's the time to talk to people who are just kind of saying like, "Whoa, Clev, what is that token? Why is it moving?" And then this is a perfect time to say like, "Actually, it's a great product that does X, Y, and Z. Let's do it."
Yeah,
Kinda.
exactly. Like, yeah, get out there, make some Twitter threads, write some articles, make some
Yeah,
videos, do the booster
and
thing.
do the booster thing. Great time for the booster round to come around. Also because your booster rewards, they're worth that much more US dollars if you still track things in that denomination. Me, I'm crypto native, but for other people.
Yes. All right. And then moving right along to Aladdin itself.
Mhm.
ALD tokenomics, the first revision proposal, it's still up. The conversation is still going on. So, if you haven't had a chance to go in there and kind of digest whatever everybody's saying, please get in there and check it out.
Yeah, as expected, not a lot of controversy on that one. It's a good thing for it's basically a good thing for everybody, and especially for those people who are able to vote, which is ALD holders.
Yeah.
So given that strong alignment between the people who are voting and the results of this, I don't think it's going to be. I don't think we're going to have too much trouble. I think that should go to a snapshot pretty soon. It's kind of like one of the many parallel tracks, and as everybody on the call knows, we've got a few that are sort of consuming a lot of mental cycles right now, but we want to keep that one moving, and so putting that up and getting a vote on it, potentially even this week, although I'm kind of pulling that I'm kind of making that up, so let me wait and see, but soon, in any case, soon. There's kind of an interesting sidebar on that forum post where Mr. Massa and Charlene are talking about like what is an incubator versus what Mr. Massa calls a venture studio, and I think that the result is that like Aladdin is neither. It's kind of like a strange combination of the two, because we sort of we're designing these products to go out into the world, and we're keeping a big share, which is kind of like a venture studio, but we're also kind of making them part of this integrated whole that works really well together. And anyway, there's some kind of interesting stuff there. Just something to think about in terms of like, what is Aladdin in the context of this ecosystem that we're building up?
Yeah. So
I think we help to answer that kind of thing as we iterate towards these tokenomics too. That kind of we'll get into that, I think. Because actually we've got the very next item on our Aladdin forum, or sorry, our Aladdin checklist here for our community call, our agenda, is the VE locking strategy. So all of this stuff is sort of different aspects of the same question of like, how is Aladdin, now that like these properties are, we've got Aladdin has these three different properties that we're continuing to develop, that they all work together pretty well in different ways. And Aladdin holds a lot of these tokens. And so the question came up from Stark actually in Discord, but it's come up, from many people and in other places, other discussions. How is Aladdin going to manage all of its Clev and FXN tokens? So, Aladdin takes 30% of the total supply of each of the products that it has built so far. And so with CTR, that's already maximum locked. So that's kind of like Concentrator was a little bit of a special case. But for Clever and for F of X, the DAO, Aladdin holds a lot more tokens than 30% of the current circulating market cap. Just because Aladdin's tokens are vesting on this on a 2-year schedule, and just basically the way the math works out is that we've got a lot more than 30% of what's currently circulating. If Aladdin VE locked 100% of its tokens as they vest, then Aladdin is going to just massively swamp that. Aladdin will be by far the biggest holder, and it really kind of hurts it hurts the individual project token holder revenue numbers, right? Because a lot of that is getting sucked into Aladdin. So informally, based on the initial tokenomics, Aladdin just instant locks everything. But we have been we kind of saw the problem with that fairly early, and so informally we've been trying to make sure that we, as Aladdin, never hold more than 30% of the current circulating market cap. And we're interested to hear from the community, if you think that that's a good sort of, it makes it like a good sort of compromise between taking too much and making sure that the tokens themselves are worthy, so the individual VE holders can do it. And also remember liquid lockers as well, right? We want to make sure that that these tokens are again, it's, to me, and again, we're getting into my personal opinion now, but Aladdin should be, I think, much more long-term focused. So in principle, ALD has a claim on the revenue that comes from all of the tokens that it holds, right? So those revenues should flow through from the products through to the ALD, and in the long run, that means the VE lockers. So we're gonna have a VE system for ALD, and that's going to be, you lock in order to earn that revenue and the governance power. But I think that the primary goal for Aladdin, the way Aladdin wins biggest, is when these products grow best. So it's important that Aladdin, as the sort of umbrella organization, not hinder the growth of these products by kind of making their revenue sharing too diluted early on, right? Yeah. So that's kind of my opinion, and I think that this kind of way that we've settled on informally with not ever taking more than 30% makes sure that ALD holders have a good share of the governance power, as well as still have some revenue coming into to Aladdin. Now, all that revenue, as with all of Aladdin's products, the revenue that has been coming in, even though it hasn't been distributed because we don't even have the VE system for ALD yet, that is kind of it's kind of accruing. So yeah, and like I say, Cenex is a polite thing to do, and that's true, but it's really more, for us, it's really more about what's the optimal growth path for everybody. And if you look at ALD as the primary, ALD is like the Warren Buffett play, where you want to sit back and be the person that owns all the best properties, right?
Yeah.
And so, that's kind of its big play, and it's a little bit less about oh, what did it yield this week, and a little bit more about I own 30% of a whole bunch of incredible, huge, and as we've seen, F of X has got a lot of excitement behind it. It's by far our biggest total addressable market product yet. What do you think,
Right.
K-Meds?
Yeah, I mean, that's sort of the way I've always viewed sort of the ALD tokens is they're more just sort of a governance share that also has a byproduct of revenue. Once we enact, the sort of the VE system. And so, if you're interested in sort of the direct yield, then than the direct products themselves are just really cool, and you just get
Well, the liquid
straightforward
locker
source.
for FFX is really cool option too, right? And I'm
Exactly, yeah.
and
And so
go ahead.
yeah, I mean, it just sort of depends on what your preference is, and sort of like how you view your your level of involvement, sort of really
Hmm.
all,
Hmm.
with the products themselves, or if you're just like, I just kind of want to sit back, and just kind of like take it easy and just be a part of the bigger discussion, and that's kind of what ALD is for.
Yeah, I think so. But we're obviously like, we're open to people's feedback from the community. But I think that, internally on the team, we kind of like this sort of middle path of,
Yeah,
making sure that we hold the like 30% at any given time, which, obviously that's got a huge benefit to preventing governance attacks and other kinds of problems that can show up sometimes. But then also just kind of like establishing, ALD as the daddy token. So
yeah.
good stuff.
Like eventually, way down the road, all the tokens will be VE locked, for the various products under ALD. So
Yeah, exactly. Once the circulating market cap meets the maximum supply, then yeah, we'll be at 30. We'll Aladdin will have 30%, and there'll be no reason not to fully lock, right? We just have this kind of strange interim situation where Aladdin actually has more than 30% of the circulating cap.
yeah, exactly. So don't want to smother the baby bird while they're still trying to fly. So
No, we don't, K-Mets, and it kind of goes without saying. Like, is that like?
I don't know. I think it needs to be said. Just
Do
in
you
this
have
day and
that
age.
written down on like a piece of paper besides it's like a sticky note on your monitor? Don't smother any babies today. Good.
There's a lot of guidelines I have to like stick to just to live a normal life, and
Uh-huh.
that
So
might be a new one.
yeah, yeah. I mean, it's one of those things you hope goes without saying, but if it doesn't, I mean, I guess you should say it.
Yeah, exactly.
Um,
Okay,
yeah. All right.
so there you go.
That's two digs at K-Mets so far. How many more can I get in? I think
I'm sure you got a boatload, sir.
I bet
I'm
I can get
sure.
to 5. I can get to 5.
We got 39 more minutes to go. You can totally cram in at least 5.
Yeah, I can get 5 in.
Okay.
Concentrator.
Let's get to concentrator here.
Yeah,
We got
that's Aladdin. So we've wrapped Clever, we've wrapped Aladdin. Let's talk Concentrator.
Yeah, man. We've got like a kind of like some pretty big news for
Mm-hmm.
concentrator here. We have basically engaged in a partnership with Reserve.
Reserve Protocol. Yeah, we got a little partnership cooking there, and we have spun up some harvesters.
Yep.
To support Reserve, including EUSD, Frax BP, High USD, and EUSD, and ETH double plus ETH. I got to be honest with you, I did not do my homework to find out what ETH double plus ETH means in the agenda. Can you fill me in?
Yeah, I think it's just ETH plus. I think, and someone can correct me if I'm wrong. I think it's a like an ETF of ETH LSDs. I could be wrong, but
Yeah,
I think
that's what I think it is. I think
Yeah.
it's 2 LSDs. I think it's Lido and Rocket Pool, or it's a basket of LSDs.
A
That's
basket of
backing.
ETH.
yeah.
So let's see here. If we jump over to Concentrator and reload the interface, we should be able to see those new guys listed.
Yeah, they are.
Oh, there they
they're
are.
doing-
Yeah, 12.86%. Concentrating into ASD curve on the ETH plus, and it's a really, so I guess we're getting kind of lost in the weeds of the harvesters, because the other thing is kind of a big deal, eh?
Oh
And
yeah, they
Yeah.
Reserve minted $50,000 in FETH for their treasury management program.
For their treasury management. And I mean, 50, you can say like 50K is, it's not gigantic. It's pretty, but here's the deal, guys. FETH as a treasury management asset for DAOs, it is literally the reason that FETH exists today, that we wished we had it for our own treasury management at some of the stablecoin events of the past, right?
Mhm.
And so, you know, like with a lot of Aladdin stuff, we made this because we needed it for ourselves, and we dog food the heck out of this thing. And so, you know, bringing this narrative to DAOs and saying like, guys, like this is a, you know, you get the decentralization. You know, we can talk about how like LUSD survived the USDC depeg because they were strongly decentralized and had a bulletproof downward, at least downward protection on their peg. And so they came out of that smelling like roses. And that's the same philosophy, that same like exclusively on-chain asset kind of philosophy that like no real world exposure, right? No real world asset exposure kind of philosophy that we're taking on FETH. And so these tokens make really good DAO treasury management, like a really good DAO treasury management option. And the main barrier that we have to get over is just like, especially for DAO treasury management, is very conservative, right? And it should be, is you need to be established, you need to be bulletproof. We've got audits and just kind of like grow organically, right? It's less of it. DAOs are not going to be out there farming their whole treasuries to try to get the DGen APYs, right?
Hope not.
Well, I mean, it depends on the DAO, I guess, but ones that want to hang on to their treasury for expenses that they want to be able to plan for, yeah, FETH is a great option for those. And so Reserve has minted some for their treasury management. This is a huge, again, it's like a signal being sent, and we're talking to a lot of. We got more people that we're talking to, trying to help them discover and understand the benefit of FETH as a treasury management superstar. And so for all you boosters out there, this is a productive vein to mine. This is something that we want to get in front of. We want to get in front of those people who are involved in, you know, the more crypto native, the better, because people get it sooner when they kind of really, you know, when they know our story really resonates with the crypto native people and the decentralization maxis. And so let's get this story to them.
Yeah, talk it up in other Discords or, you know, Telegram groups or whatever, and let them know, and just reach out to folks to make them aware of it, you know, that it's an option. So
absolutely, you know, and like a solid name like Reserve, choosing to add that as part of their treasury management approach, it's huge. And we're going to use that as a springboard and continue pounding that. They're not the first, mind you. Lots of, you know, there have been a lot of partnerships that have had FETH minted for their own treasuries. And we get these partnerships going and get people thinking about it and talking about it. And then organically, hopefully, we get that, it starts to spread.
Slowly and then suddenly.
Yeah, isn't that always the way? I
hope so. Yeah, it's gonna.
I mean, it has been with a lot of our other stuff. So
yeah, it's been pretty cool. As you just kind of like sit there and watch this stuff grow and see people talk about it. It's kind of hard to watch it in real time, but once you look back and you just think about, man, like this is moving along. Like people are talking about this and are interested, and you know.
FFX has been in the market for all of what, 2 months?
3 months, 3 months, yeah.
Especially for something that's, you know, that is as focused on resilience as us. Like your track record is so important, right? Like having that long track record is such a big part of that story. But the fact that we're so young and already getting this kind of discussion going is good. And by the way, again, you know, to put it in the context of other launches that you have seen recently, we don't and we never have played the huge cheap pre-sale to giant crypto Twitter accounts games.
That's right.
So
yeah.
So our tokenomic structure is pretty unlike, I think, anything else out there from the very beginning. It's made to be like no surprise unlocks and no cheap pre-sales. Anybody who bought any Aladdin token paid the exact same, like nobody got a special deal, right? And you see a lot of launches that happen where, you know, you've got super cheap token pre-sales that kind of go on a limited list to people with huge reach, and you know, those people take care of pumping it, and then, you know, they can easily exit quite early at a huge profit, and that kind of stuff does not happen with Aladdin token. So we lose that like giant crypto Twitter frenzy, but the plan and the whole reason we go that route, in addition to just like the general principle of fairness, is you get that sustainable organic growth with no like time bombs down the way, right? Or at least that's the goal here, right? Is for when people come to these tokens to take a look at them and see the structure and think like, wow, this is a token designed for the holders, right? Not for early exits and big gains for a few small number of people in the beginning.
Yeah. So we're in it for the long haul here, folks. There you go. All right. Well, that's Concentrator, and it's been a whole 8 minutes since you gave a dig at me, Kruger. So you're kind of falling behind here. I don't know if you're
Trouble
gonna
is,
make
I didn't
5
stop
now.
talking for those whole 8 minutes, so you haven't said anything.
I'm playing
I've been giving you
4D chess
space.
over here, sir.
Wait a minute, is this a curious game where the only winning move is not to play?
That's right. Exactly, Dr. Falcon. Yes, exactly.
I butchered that quote. I apologize to all the War Games fans
I
out
got it
there.
wrong as well. So there you go. For all you War Games maxis, we apologize. So,
Yeah, we blew it.
Oh well. Okay. Well, you want to talk about FX a little bit?
Okay, let's get into FX. FFX. That's the big one.
F of X.
Okay, so and I think everybody has got a pretty good idea. We spent a ton of time talking last week on the relative merits of the zero beta stable, that is the USD pegged stable offering by FFX. We summarized everything. We had a lot of great discussion in the community call. So we've basically gone from discussions in the Discord onto discussions in the community call, and now we've had the forum post. And the forum post has only been up for 2 days. It has 20 responses already, which is pretty amazing. The discussion is continuing. Part of the idea behind going to the forum post approach is to give people a chance to make it a little bit less like rapid fire argument like you get in the Discord, and give people a chance to kind of like put together their kind of position and post it, and then like get a chance to read through everybody else's considered position. So given that the forum post has only been up for a couple of days, we want to give people a chance to catch up and share their perspective as the discussion evolves. In parallel with this, the team is talking about it behind the scenes, and we're watching the public discussions, and we're having a lot of, I would say, some of the behind the scenes. A lot of our discussions are getting a little bit almost more abstract.
Mm-hmm.
You know what I mean, K-Mets? Like, one of the things that we're talking about is, we've been discussing this whole idea of FFX's narrative, and does adding this stablecoin make the overall narrative more complicated? Does it make the narrative of the mechanism more complicated? Which of the two like implementations makes the narrative more complicated? And the thing is that, in my view anyway, the narrative of FFX, it kind of depends on what you want FFX to be. Like, is FFX a stablecoin protocol first and foremost? Because I mean, that was certainly the impetus for creating it. But if it's first and foremost a stablecoin protocol, then that kind of changes the narrative. We're not talking so much about our derivatives and splitting all these different assets into low and high volatility and blah 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 blah. It's less about the mechanism in that case, and more about sort of like the features of the tokens. But then if FFX is better, if the story of FFX is better told as this like derivatives protocol that creates, and that one of its things that it creates is this amazing stablecoin, well, that changes it a fair bit, because now you want to talk about the merits of the mechanism and sort of like the ways that it gets used. And then in that case, the implementation, I think, discussion matters a lot more. So we're kind of having these discussions, and for people in the community who want to chime in and kind of give a one of the things that we're always curious about in the community is how people view FFX. Like, what if you had to describe it in a single sentence or like 2 sentences? What is the thing that for you resonates the most? And I think sharpening that message overall and kind of understanding how we want to do this, how we want to position is going to be kind of like part of this process of figuring out what implementation best supports the narrative. We have to kind of like figure out the big story so that we know which narrative is our kind of our primary one, and then it makes answering these questions a little easier.
Yeah, so I mean, it's been, I mean, quite lengthy discussions, really, and I think everybody, excuse me, has sort of thought about it, and it's really funny. F of X from really kind of the very beginning has always sort of been sort of a this or that sort of the F and the X. There's always like two sides to like every discussion, and it's not. I don't think. On almost all of them, it's like, well, the X token is really important, but also so is the F token. And then, in terms of the stable coin, and then also the derivatives products. And so it has always sort of like had this dual personality to it. And
we
so
struggled
sort of
with this, I think, you and I, especially K-Mets, as we've been in, we've been on lots of, we've done podcasts and Twitter spaces and, calls and things like that. And my first instinct sometimes is to talk about the stable coin, which whether it's pegged to a USD or not, I think this is the best stable coin that in crypto by a pretty good margin.
Oh yeah.
This is a huge deal. It solves the trilemma, right? It solves the decentralization plus scalability plus peg stability, in a way that nobody has done before. Like it is a big deal to me. And so you go through this whole story and you can talk for 20 minutes about the like incredible aspects of this stablecoin and why it should underpin all of DeFi. And then it's like, oh, and by the way, like it also like the way the mechanism as a byproduct, when you're pitching it in this way, it's like, oh, as a byproduct, we create XETH, and you have a completely different 20-minute discussion about how like what XETH is and what it's like and why it's like a really cool, unique product. And so we've always struggled. You and I have always struggled to really sharpen that story.
Yeah, and that's part of the growth of these protocols and the ideas that come from them, right? And so exactly, Cyril. You talk about the rebalance pool, and that's like, I mean, you just keep going, right? I mean, it's like
exactly.
Okay, it's just everything about it is pretty amazing, and it's kind of hard to narrow it down to just sort of like, well, this is like the killer app use case for it. And it's like, well, maybe there's like several killer apps use cases for it. And it's just kind of which horse, do you want to ride there? And so,
exactly. And like on the subject of the rebalance pool, I've been thinking I think about this a lot, especially recently. And I've been thinking like one of the best ways to pitch the stablecoin product of F of X is to say that like, it's totally, all the things that I mentioned, right? Like it's rock solid and decentralized, but it's also got built-in real yield. A stable coin with a built-in real yield. I say built-in, it's a little misleading. You want to be careful there, but the fact is that this mechanism has a way to earn ETH from your stable. Like first of all, that's on its own is just gigantic. But second of all, it gives you this, you get this kind of, I think maybe a unique narrative package to say that like, what do we need in crypto right now? Right now, the stablecoin world is getting just destroyed theoretically by the fact that real world USD yields are so high, right? T-bill rates are huge. And so stables on chain they're no longer competing with 0% interest in the real world. They're competing with 5%. And that just has disrupted everything. It's disrupted the CDP models. It's disrupted like Liquidy's having redemptions all the way up to hundreds of percent or a couple 100% of collateralized ratio on individual troves. Prisma's in the same boat. Anybody who's not charging big interest rates on their stablecoin loans are running into trouble with them getting scooped up and then redeemed and farmed out in the real world with all these assets that take real world asset exposure in order to suck that yield in from the real world. And now we have a stable coin with a fully on-chain, fully native, built-in yield, which right now insanely is over 10%. But in the long run, I would expect it to be kind of like comparable and compete with that once people really have a level of comfort with the mechanism and the tokens, I think I would expect that rate to come down and just be competitive at least. But it's completely on chain and isolated from any risk you have to take in the real world.
Yeah, we've cooked up a pretty neat little gym here, and so it's really just kind of figuring out, all the use cases and sort of like what's the best use of our resources, right now, and how do we want to position ourselves, and so
Yeah.
these are the discussions, and it's a lot of different answers, right?
Well, and by
Obviously.
the way, it is incredible. Like, we appreciate everybody in the community for coming out and like, speaking passionately and giving your perspective and chiming in. Like, this is
Great.
just love it. Just absolutely so happy that everybody is giving chiming in.
Yeah, it's definitely a bull market in the Discord. I'll give you that. It is hopping in there, which is great.
Well, and also in the forum, like, people are
Yeah.
taking time to come by and make forum posts. I appreciate that a lot too. That's really amazing. And that's
Yeah.
how, you know what? And I should probably mention this, the team is always looking at what the community has to say, but I think just to set everybody's expectation, in the end, we will, like, this is not, the idea is not to design the product by committee. The idea is that we want everybody's feedback. We want to know everybody's kind of position and get the sense, really like powerful sense of where the community is at and get all the best ideas. And then the team is going to take all of that. We're going to synthesize that into what we think is the right approach, and we're going to justify that and everything. And then we will put that back to the community for review and then ultimately approval from token holders. So just to be clear, we don't want to give you the impression that, like, you have to win your argument in the forum or in the Discord in order to somehow steer the ship here, right? This is really more of a community discussion. Honestly, I don't expect that the community is all going to come to a single view on this, and so the team will we're gonna put something back out once kind of all of the everybody's had the chance to follow and read along and everything else. I think the team is gonna try to put a clear proposal together.
Yeah, and ultimately this is a
Yeah.
governance process. So I mean, there will be we'll have to have a snapshot vote and everything like that in the
That's
end,
right.
so.
Yeah, exactly. So what I expect to happen is that we will put together a plan, and then we will post that for approval from the community. And if the community, I mean, obviously, if the community kind of squashes that, then that's a different. Obviously, we go back to the drawing board. But in terms of synthesizing the final things together, I think that is going to fall to the team based on the results of these discussions. Like I say, I just don't want to give people the impression that they need to, like, win a battle in order to get their voice heard. Your voice is very, very much being heard and integrated, and we will try to do our best job. Once we put everything together, we're going to do our very best job to kind of, like, say why we chose to put this particular proposal, this particular selection of ideas together.
Yeah, so that will be forthcoming, but appreciate everybody's input thus far. I always like reading everybody's opinions on stuff. And we got a lot of smart people in this crowd, by the way.
Awesome.
It's pretty cool.
Absolutely
So,
awesome.
Very thoughtful folks. All right, so that's that. Next up, we've got
it's a big one. We got nothing but big ones.
this is really cool. We actually finally have some utility on Arbitrum for FETH and XETH, other than the liquidity pool, and that is we have a collaboration with TimeSwap, and
So tomorrow?
yeah,
Is
it goes live tomorrow, and you'll be able to borrow and lend FETH and XETH on TimeSwap on Arbitrum. So that's going to be pretty cool.
Mark your calendars. This is officially, I think this is the first external borrow and lend integration.
I think so. Yeah.
Of FFX anywhere.
Yeah.
And you heard it here first, folks. And like you, and TimeSwap was the first one to the prize in terms of getting this integration done. So now borrowing and lending FFX ETH. I have a feeling it's going to be a domino situation, but we're going to, let's enjoy this one and go check TimeSwap out is something I've been thinking about a lot recently, especially with all the discussion. Like you hear Cyril and I talking about the like the problem of redemptions on CDP troves like Liquidity, and you know, wouldn't I think about things like, you know, would you ever want to borrow against your FETH? Take that little bit of ETH exposure, because the volatility is so low on FETH. You don't have to worry so much about the value of the collateral kind of jumping all over the place. And so, you know, are there any interesting strategies in that world of borrowing against FETH? I bet there are. I haven't thought of them, but
Yeah, I've actually been excited for the prospect of, like, when we do enter into sort of a depressed market or like a bear market or something like that, like lending XETH, like I just feel like that's a way to like haul in
well,
fees.
shorting.
Like, yeah,
That's how you.
exactly. And so that's kind of like
borrowing it and selling is shorting it. So yeah, lending is holding the so basically, the lending and borrowing gives you the ability to make your own custom positions. You can short things. You can now short ETH with these
amplified ETH.
you can short amplified ETH. That's right. Yeah, absolutely. And you can also, by the way, because FETH, you can short unamplified ETH. So if you have like a bearish 6-month view and you don't want to ride the roller coaster, you know, take a conservative short out and hold your negative FETH. I mean,
there you
guys,
go.
it just kind of goes. There's just a lot of options, a lot of possibilities when we start having these integrations.
A lot of ways to put the Legos together.
Absolutely.
So there you go. That goes live tomorrow. So check out TimeSwap. And we will keep you up to speed on that one.
Yeah, absolutely. And as always, boosters, hit the streets on this one. It's just like an endless stream of like great boosting material. And it's not it's not over yet, KMETs, because the next item on the agenda is a biggie as well. They're all biggies.
This is a huge one that we've been waiting for a while, and this is really exciting. We finally got our giant audit. It's basically finalized and kind of like ready to go. So the big updates go active this week, and gosh, let's run through them here because there was quite a few.
Okay, well, we got a few. So we'll give you the high level view now. I think we're gonna like drop we'll drop a thread out that kind of goes through the details, maybe even a little article just with kind of like just with a little bit just to kind of like think of it like a change log. Just to kind of give people a quick idea of what's coming. But this was one of those, you know, we've talked about this for many weeks. We've had this audit in the works, and it kept growing, right? We kept adding these features and squeezing them in on the existing audit. And so now we kind of like all of that waiting, all of that deferred gratification that you're so good at, KMETs, we're in the payoff phase now. So first up, and arguably one of the biggest anyway, is the rebalance pool is becoming fully liquid. So anything that might have been stopping you from wanting to farm that real ETH yield in the rebalance pool just because of that lockup period on exit, that's going to be gone now. And this is just going to be a straight opt-in, opt-out yield opportunity. And obviously, as long as you're in, there is a chance that you buy ETH. Which, I mean, honestly, for a lot of people, I imagine, and like myself included, but I know a lot of traders that I've talked to, they consider that kind of mechanism an amazing way to bottom fish and to scoop up cheap ETH. And so you're going to have people jumping into the rebalance pool if they think that there's, if they ever thought that there was a shock coming that might push the protocol down towards stability mode. By having it in that rebalance pool basically acts as a limit order to automatically buy low priced ETH. And so that's pretty attractive on its own. But the being able to kind of get in and out is, I think, a huge part of the story of making that rebalance pool just the fundamental. I don't want to say risk-free rate, because that's first of all wrong, and second of all such a loaded term. But it's like the built-in rate. It's like the foundation rate of our stables.
Yeah.
So we'll think about the language.
Yeah, well, I mean, it's just you can single-sided stake your stables to just
To
get ETH,
earn
and
ETH.
it's
I
like
mean,
uh,
that's nuts.
it's, I don't know how you lose in that situation. I just it's pretty cool. So
Yeah.
that's one
So
item.
fully liquid rebalance pool, big one. So the automatic wrapped stake ETH conversion for revenues. So this one was a little behind the scenes change that we needed to make in order to properly integrate with the with
Liquid
our
locker.
liquid lockers.
Hmm. Yeah, so this basically allows them to kind of like seamlessly integrate the yield distribution, and so kind of like once this is now activated, then we can sort of like automatically, we won't have to do a manual dump of the revenue like we did last week. So
That's
it'll
right.
just
So
be
basically,
automatic.
this integrates automatic weekly revenue distribution,
Hmm.
and that goes live. That's just that clicks into place now that we've got that code audited and can be deployed.
Yep. And then the other thing is like we have like some new risk management mechanisms that'll be going in as well for kind of stability mode, and that's like some FETH redemption incentives and some XETH minting incentives that'll be going live once the collateral ratio gets below 130. So
Yeah,
we
and I mean,
kind of
so
detail those a little bit as well.
we'll make some comments about that in the tweet thread or the article, probably just the article, just to kind of say like these are just kind of like we're always working to make the protocol as robust as possible, right? And right now the protocol itself is taking 25% of the total protocol revenue, right? And that money is just kind of accruing as a treasury fund. But what we've done is we've kind of created this system where that treasury fund then starts to form a war chest to help to maintain stability in sort of like against headwinds. And so that stability fund that's growing on the protocol, the longer that it exists and the more revenue that it harvests, it is automatically going to be available to help reinforce stability of the protocol. So the longer that f of x operates, the stronger it gets.
Yeah, so pretty cool. And then the next thing that this audit addressed is basically the ability to receive vesting tokens as well, basically lock them while they're vesting in a liquid locker. And this is pretty cool. So you can, with sort of like the booster distributions,
Yeah.
as your tokens are vesting, you have the option of opting in and locking them, all of them, as a CVX FXN or SD FXN, and receiving the yield while they're vesting to you. So
Pretty
this is
awesome.
like really cool for folks that are like really interested in locking them up and then just getting the yield as they vest. I mean, that's
Absolutely.
huge
And so
bonus.
it's a huge bonus, and we've been talking about it for a while. People, but because of just again the way we were describing earlier, that the audit has kind of been delayed a few times getting those results back. That has also delayed the distribution of the booster funds themselves, because we wanted that contract to be in place so that boosters could do that that behind the scenes locking. And so we have not distributed the FXN rewards from the first booster round vote, precisely because that contract was not in place. So because we've now got that audit in place and the new vesting contract can be deployed, we are in a position where we can distribute the booster rewards.
Yay! Yes,
Yay! And that is Thursday.
this
Right?
Thursday. That's right. Yeah, it'll kick off. I'm not sure when on Thursday, but it'll be this Thursday. So
Yeah. And so will it flow to liquid lockers too? Yes. I mean, so the liquid lockers right now already get revenue through their like through whatever mechanism your liquid locker uses, right? So the liquid locker locks the VE tokens, the revenue flows to the VE tokens, and then they have some, it's up to them what they do with them from there. But generally speaking, they pay some or all of those revenues to liquid lockers. For this situation, the boosters are getting allocated FXN tokens, in as a reward for their boosting work. And so but those always vest, and those vest over, I actually don't remember. They vest over some period of time, but with the new vesting contract, you're able to lock your vesting tokens in a liquid locker and get the underlying yields from that liquid locker even before your tokens are vested and you can claim them. So basically, it's a way to immediately get the, I mean, again, assuming that the yield is the thing that you're kind of looking for, it's a way to immediately get at the yield of the tokens that you're given in the booster program, even though they haven't vested yet.
Yeah. So, so your tokens will still be vesting over the entire time period. You won't be able to claim them, but yeah, like Paul's saying, you can claim the yield.
Exactly. Yeah. So basically, the vesting period, I believe, and Charlene can correct me here, but the vesting doesn't change, and as your tokens vest, they will now be claimable as whatever you wrap them as behind the scenes. So if you got 100 FXN tokens, I mean, we should be so lucky. Maybe we'll say you got 10 FXN tokens to make this a nice, universally
relatable
applicable
example.
Relatable, yeah, exactly. You got 10 FXN tokens. You get those 10 FXN tokens, but if those are vesting over, I'm sorry, I've completely spaced on the booster vesting period. Is it
I
1
believe
year?
it's a year.
1 year, okay. So those 10 tokens, let's say you got 12 tokens.
Okay.
They're vesting over a year. And so if you just leave those as FXN, then, you are going to be able to claim sort of at any given time, you're only going to be able to claim whatever fraction of the year you've gone through. So after the first month, you can claim 1 FXN. And after a month and a half, you could claim up to 1.5 FXN. And then once you claim those FXN, you can lock them yourself, or you can mint them into liquid lockers or whatever you want. With the new contract, you'll have the ability to take all 12 of those FXN on day one and turn them into CVX FXN or SDFXN. So behind the scenes, they will have become either SDFXN or CVX FXN. And then your vesting schedule remains the same, but instead of claiming FXN, you're claiming whatever you wrapped it as behind the scenes. So now all of your tokens have become, for example, CVX FXN, and after 1 month you can claim 1 CVX FXN. But the magic is that the yield from all 12 will be accruing to you from day one.
Yeah, and
from
just
whatever day you choose to lock them.
Yeah, and just a quick point that the only benefit you get from this is the yield. Like, so for if you decide like on month 1 to lock everything as SDFXN, you don't get the governance votes that you would with it until they're claimable and you actually claim
good
them.
Point.
And but you definitely get the yield the entire time. So just
Okay.
FYI.
Good clarification.
Yeah.
So basically, if you're willing to take, if you're willing to hold the liquid lock token instead of the FXN token, then you get yield from as soon as you choose to do that.
Yeah. So there you go. Pretty cool.
Very cool.
Right.
No, you do not get all CVX FXN at upfront. You have the same vesting schedule that you would otherwise, but you get the yield behind the scene.
Yeah.
Claimable, but all the yield is claimable. Sort of, it's the yield on those does not vest, just the tokens themselves. You basically choose the idea here is you can choose the form of the tokens you get from the booster program, but the vesting period remains the same.
Yep. Okay. All right. So that's kind of like the audit update, the high level stuff on the audit update. Like Kruger was saying, we'll have a Twitter thread and kind of a short article that kind of dives in a little bit deeper.
Yeah. Now, one more thing on the audit report, actually. So one of the other key things that was released is that the ability to do VEFXN boosting on yields on FXN yields in the rebalance pool. Right. So once FXN liquidity mining is turned on at some point in the future, once we've got T's crossed and I's dotted and various other things under control, we're going to have the ability, we're going to be emitting FXN for liquidity mining incentives to the rebalance pool. And, obviously the rebalance pool receiving FXN incentives begs the question of, can you boost them if you're a VEFXN holder? The answer is yes.
Yep.
Yes, VEFXN will boost rebalance pool yields. However, because this is a change required at the rebalance pool level, we have to deploy a new rebalance pool. That is going to introduce some complexity here. So the rebalance pool has got the features that it needs now going forward, but we're going to have to deploy a new one, which means that we're going to have to ask users to migrate from the old rebalance pool to the new rebalance pool. And one of the things that we've come up with to sort of incentivize this and help offset people's gas costs, although honestly, sidebar KMETs, the rebalance pool gas costs are very, very reasonable. Like this is a low gas thing. Like even mainnet with like kind of high-ish gas, it's not a crazy thing to get in and out of the rebalance pool, which I appreciate a lot.
Yeah, you don't have that. That's what makes the fully liquid even better, right? So
that's right.
Yeah.
But now here's kind of the last bit of big news for everybody in the call. In order to incentivize and compensate people for having to move to the new version of the rebalance pool, we are going to run a bonus rebalance pool farming event.
Yeah, there you go.
For a month. And so essentially what we're going to do is we are going to invite people to jump in and farm that farm that new rebalance pool. And essentially at the end of the month, we're going to distribute, I believe, Charlene, correct me if I'm wrong, I believe it is 1,000 FXN tokens proportional to everybody's farming activities in the rebalance pool.
They were planning for 2,000, actually.
2,000?
Wow.
No.
Double.
No. It's too much, Charlene. It's too much.
Special incentives for people to migrate to the new rebalance pool and farm the rebalance pool, and it's also Christmas gift to the community.
And it's a Christmas gift. Oh my.
Well, thank you, Santa Claus. Man.
Yeah, that's wow. I guess sometimes the fact that I can't remember anything ever works out in my favor, because that's exciting for me too.
That was actually a pretty good build up there. That was a very, very good.
People are going to look at that and think it was like a planned shtick, and not that like Kruger just has a perfectly non-functional brain.
I was wondering when you said 1,000, I was like, he's playing some 4D chess over there. He knows what he's doing. Turns out he's just flying by the seat of his pants, folks.
or maybe it really is 4D chess.
Yeah, well, all right. Let's see the other moves you make here.
Yeah, let's not get too hung up on my other moves. Let's just focus on that one. Okay, so Mad Copy, what do other users need to do if you're an FXN holder? So FXN is not impacted here. This is purely for FETH and for people who have deposited FETH in the rebalance pool in order to earn that sweet real yield. And the old rebalance pool is going to be migrated over to a new rebalance pool. We will require people to migrate from the old version to the new one. We understand that is annoying. The gas won't be much of a hardship, hopefully for most people. But we will. The idea is to make it worth your while, and also to have a fun event. And you know what? I also think getting our story out. Part of the reality of crypto is that our story will go a little further when we can post some exciting yields and some kind of special events and stuff. And so again, really depending on those boosters to get out there and pound the pavement on that. And let everybody know, because we think that growing that, like getting the message out there about FETH and growing that should have the result of really helping to incentivize growth across the protocol, right? More FETH minted pushes that leverage rate, or the effective leverage rate on XETH up, and then it brings in more interested parties on XETH. So
Yep.
Yeah, absolutely. So the event does.
Crypto Vector said $1 million. And I have a question for him.
Oh,
What's
okay.
the FXN price that he used for that calculation?
Yeah.
Sorry, I didn't hear that. What did you say?
What was the price of FXN that you used for your calculation of $1 million? $1
million.
I think that I think he knows something we don't.
It's
I know where it's going. I know where it's going.
We
Not
Oh,
financial
look.
guys
advice.
of
It's
Alpha
never.
League.
It's an alpha leak. It's. I mean, listen. I don't think that knowing CryptoVestor's opinion is exactly an alpha leak. I think that it is. We love you, crypto. Not.
Yeah, I think he's bullish.
Yeah. I think
Yeah,
he's
I'm very bullish. I'm very
We,
bullish. I'm not
Oh,
shy
phew,
about
he
it.
clarified it. Thank
No,
goodness.
and you shouldn't. He's Cyril. All right. Yeah, and so Mako asks about governance, and Paul says, yeah, it's part of a liquidity incentive. So yeah, just to be clear, just so that people know where this, again, I talked earlier about all of our transparency. At this point in time, so basically the amount that is being used to incentivize that rebalance pool farming is coming from the liquidity mining bucket, which is basically what we have access to right now. And so prior to actually engaging liquidity mining, we can tap into small amounts of that to create these kinds of this kind of event. So that's what we did.
Yep. And
Emission already built into the plan, so it's not coming from anywhere secret.
Yep. And then really kind of last thing we have on FX is that, speaking of booster rounds, like we'll be having round 2 here kicking off shortly. And
For
so
FXN.
that's right, for FXN. Well, and for Clever as well. And so
But you're right, yeah, both.
and so what we're going to do this round, instead of the team kind of like, cruising around and trying to find everybody and catalog everything, we're going to have a form that folks can fill out and submit with all their information and the content that they've provided. So that'll kind of help put you in control and make sure that you're entered into the process and
yeah. So just to be clear, it's a web form that you fill out, and by filling it out, you basically are creating an entry on a spreadsheet. Is that right?
Yes. Yeah. It'll be on a Google sheet, and it'll be within your control to enter the info, and so you don't have to rely on second party to do it.
Now, is that Google Sheet publicly viewable or no?
We can certainly make it available if folks.
Well, part
wanna,
of it, because when it comes time to voting, I think one of the things we want to give people a way to kind of self-log like links to the work that they've done.
For sure.
And so that voters have a place to look for information. Because one of the bits of feedback we've got on the booster round is that it's like when it comes time to boost, when it comes time to do the voting, some of the voters are especially are really concerned about making it like correct and like they want to reward the people who did that best boosting work, right? They want to make it work that way, and that's what we appreciate. That's the whole point of the program. And so for those voters who are like, well, who did good boosting and who didn't, I don't really know how to evaluate it or where to look. The idea here is to allow the boosters who want to put some links to the work that they've done and kind of advertise themselves a little bit. Think of it as campaigning. You have a central repository, a place where you can put your name in, so that it makes sure that you're on the list. Obviously the team is not going to let people who didn't do anything put their name on the list. We have that same veto just to make sure that it's all legitimate entries. But then you have a place to share some links so that the voters can see what you've done.
Yep, absolutely. So we will keep you informed when that's ready to go out. So there you go.
All right. Double boosting, huge FFX discussion, Clever, Aladdin. What a week.
Yeah, it's only Wednesday. It's only
Wednesday.
That's right.
Well,
all day.
And as all day long, and as they say, folks, you'll get what you get and you won't get upset. And
that's not what they say.
That's what they say. That is the only correct way to say what they say. But I don't think there's any reason to be. There's no reason to be upset.
No,
so
of course
we don't even need to talk about it.
You don't even need to throw a fit. That's right. Yes, exactly.
I don't know why that would even be in part of the discussion.
No, of course not. Of course not. Well, gang, that is your community call for Wednesday, November 29th.
Yeah. Also for Wednesday, November 29th, for those of you not from Texas. So It's been a slice as always. Thanks everybody for coming out.
I got to give you credit. In like this last minute and a half, you've gotten in like 3 digs, and so you're like,
I
you
realized
caught up
I was
very quickly.
I was behind schedule. This is the way I operate. I procrastinate, and then I get everything done at the last minute.
Just marvelous. Just marvelously efficient. All right. Okay, everybody. We appreciate
Thanks
you
all.
being here. Thanks.
And we'll hopefully see you all again next week. Same time, same place.
All right. Bye, guys.
Thanks,
Thanks,
guys.
guys.
Take care.
Bye.
Bye-bye.
Thank you.